The pain gets even worse. Did you see what was happening with the US dollar against the rand yesterday? A record low, 19 rand 79 against the US dollar just after 9 p.m. last night. It's the single biggest drop since November 2021. So what in the world is going on there? Could we really correlate this down to what came out of SARB yesterday with that 50 basis points increase? Let's get the thoughts of Thabani Ndwandwe, Chief Risk Officer, Personal Private Banking at Standard Bank. He's joining us this morning. Thabani, good morning to you. I appreciate your time in speaking to us. We'll get to the rand dollar in just a moment, if you don't mind. But what did you make of the 50 basis points? Because the South African Reserve Bank Governor, Lesetja Kganyago, was saying it will benefit all of us, medium to long term, but I don't think we all feeling that. Do you agree with what he had to do?
Good morning to you and your viewers. I must say, it's a very difficult situation and it's a difficult balance for the Reserve Bank. On one hand, if you do not raise interest rates, what you will find is that the rand will sort of take a bit of a dive. Whereas if you do increase the interest rate, you hope that you can just help the rand a bit and strengthen it a bit for a while, which makes the imports a bit cheaper, helps us with petrol prices, etc. So I do think it's the right call to increase interest rates, but it doesn't mean it won't come with some negative consequences to the economy and to the consumers at large. So we do think it's a really tough balance at this stage.
I was taking a look at the markets at the moment, currently 19 rand 79. So we haven't exactly recovered much, and I don't imagine there's going to be much trade, much intra-dollar trade that's going to bring us back down to a reasonable level. Yeah. Can we tie this, Thabani, do you think, what was the announcement yesterday, 50 basis points directly to this jump in the US dollar? Can we correlate those two directly?
Whilst you can't exactly correlate it to the change yesterday, but you have to understand that the markets were pricing in about 75 basis points. So 50 basis points was slightly below what the markets were pricing in. This morning, when you look at the spreads, you can see that the markets are starting to price in another 50 basis points in July and another 25 in September. So, of course, and this is a big trick that the Reserve Bank has to balance. If the market are expecting you to increase interest rates and you don't increase them, you tend to see the dollar impact, the rand sort of slumping against the dollar. And that's why I think you can tie the fact that the increase of 50 is slightly below what market expected, and therefore you see that the market just responded a bit negatively to that increase, and because it wasn't as big as they anticipated.
Thabani, I'm going to ask you to look into your crystal ball in a moment. We'll get there. Maybe plug your crystal ball in if you haven't got load shedding. We can take a look at the rest of the year in a couple of moments. First of all, though, Chief Risk Officer, Personal Private Banking at Standard Bank. That's what you do, of course. What are you advising the bank? What are you advising clients? Is now the time to cash in those dollars? Is now the time to rather hold on to what you have? Could we go through 20 to the US dollar?
Sure. It can. It is possible that we can go above 20, but I think we're going to come back. I think you're going to have a market that's sort of going to adjust a bit. You always get a bit of volatility in the short term, but I'm hoping that you're going to see a bit of return next week. I'm not really expecting further deterioration in the rand. Of course, markets do what markets do. You can't sort of, confirm exactly what's going to happen. The big thing for us as a country, there's many things that we need to get right beyond just the interest rate. You have to get the electricity right in the country. We have to see some of the prices, for the commodities increasing. And if you start seeing a bit of commodity increases, we are going to benefit from that. And then lastly, of course, you have to hope that the markets in the internationally and the economy internationally starts sort of ticking up, and so that we can benefit from it. But ourselves, we have to get the country right. It's going to be a tough period because we're going into election season, and so of course the volatility in the rand is going to be a lot more. We're going to expect a lot more volatility in the next while as we go into the election season. But I do think that it will come back below the 18 rands levels.
I'm trying to find some silver lining here as well, Thabani. So between the blackouts, between the grey listing, between 19 rand 79, between the elections coming up, between all the other issues we're going through, does anybody benefit from what we're going through at the moment financially? I would imagine the banks do, because people are going to start taking unsecured loans. They're going to start extending revolving loans and house bonds. They're going to start increasing and extending their car loans. And I'm sure the banks are doing well, aren't you? But who else would be benefiting from this?
So the banks actually don't always do well in these times. Initially, you get what we call the endowment benefit, where you see when the interest rates go up, you see the benefit. But what you tend to see is that as consumers start really suffering and they start having problems in terms of finances, I mean, it's a 40% increase in terms of installments for home loans. So you can imagine if you had a bond of 10,000 rands, now it's 14,000 rands. Your car, if you had a car, that's about 350,000 rands. Your installment is up by another 800 rands from the time of the start of the increases in interest rate in November 2021. So now you can see that consumers are going to start defaulting and missing their payments. So banks start seeing a bit of pressure. So I don't think in this economy, in this environment, anybody really benefits. It's just that we have to get through this period. And I'm hoping that next year we start seeing a bit of an improvement. Our expectation is that we're going to start seeing interest rate reduction next year, which gives a bit of relief to consumers and companies. And of course, when you cross the sort of call it election period, there will be stability in the country. And I'm really hoping that we're going to see a lot of energy coming into the system. So we're going to see electricity stabilizing. And, as customers start using energy a bit more wisely and actually putting more solar and the likes, that will reduce demand on Eskom. And hopefully we're going to get through this season and see a bit of stability in the economy.
And Thabani, as I say goodbye to you as well, what are you advising clients right now? Is now the time to start taking on unsecured debt to get themselves through this phase? Let's call it a season of very high interest rates and maybe pay that back later when the interest rates come back down. Or do you just stabilize, or do you start cutting fat? Do you start cutting back on what we're spending? What's your advice to everyone this morning?
I would definitely never advise consumers right now to take more debt. Yes, I'm a banker myself, but definitely I don't recommend taking more debt. What I really recommend is that you have to start, tightening your belt. We don't know what the next interest rate hike may look like. We might see another interest rate hike, so we have to tighten your belt. But one of the most important things I always encourage our consumers is that to speak to your bank. Always engage your bank, engage your creditors. Right now, make arrangements. If you're feeling pressure and you feel you can't pay, engage your bank, talk to your bank, get term extensions, get payment holidays, whatever you need to do to buy time. It will get better. It will get better next year, I'm hoping. But in the meantime, you have to make the right arrangements. Don't take on more debt, though. It's not a recommended thing right now.